Hi, it's Justyn here, Trader 187, and I'll be doing a video tutorial on a technical indicator called the Relative Strength Index, aka the RSI. The RSI, or Relative Strength Index, is a momentum oscillator that measures the speed and change of price movements. So it's a good tool to be used to help you to identify when the market is likely to change, whether from an uptrend to a downtrend or from a downtrend to an uptrend. Now I'll show you how to apply the RSI to your charts when on MT4. So you click on your chart, insert, indicators, oscillators, relative strength index. Click. I'll leave it as default so you can see how it comes up on your chart. So press reset, then press OK. So this is the RSI and how it will look on your chart. It may look a little different, but right now I'll show you how to change it. So you right click on the RSI properties, what works best, the period, what works best based on my experience and my experience over the years and a lot of tests, is the period 9. So it's not too reactive, but it's reactive enough for you to identify changes in the RSI. Also, I like to change this color now to red so I can see it easier. You can change it to any color you like. Levels, you got the 30 level, which is here. The 30 level, which is here. The 50 level here. The 70 level here. If you don't have the 50 level already, you can just press add and press 50. Type in 50 and press OK. So now you can see that the RSI period is set to 9. We've got the 30 level, the 70 level, and the 30 level, the 50 level, and the 70 level, and the RSI is also in red. So how many people go wrong with the RSI is they only take into consideration when price is overbought and when price is oversold. Now when in an uptrend, that is difficult. So generally you should never just use the RSI for using it for overbought and oversold. What I mean by that is many people are told that when price, or when the RSI reaches the overbought area, which is the 70 line, then you should sell. But at this point here, you can see that this is the price point, and when price did actually reach the oversold level, price still increased. So in this situation, if you was to use the RSI as a way to tell you when to sell, just based off when it reaches, just based off when the RSI reaches the 70 level, you'd actually make a loss. Also, people also state that when price reaches the 30 level, the oversold section, then it's a good time for you to buy. However, at this part here, where price actually does reach the 30 level, as you can see, price still does go down. So in this situation, again, you would have lost money. So just to add, I think it's a very bad idea if you're going to be just using the RSI and only taking into consideration the oversold and overbought areas for you to buy and for you to sell. Instead, there's a much better way to use the RSI, and that's called divergence. Now there's bearish divergence and there's bullish divergence. I'll look back on the chart now to find good examples of both. So here is a good example of bullish divergence. Now I'll highlight it and explain it as I go on. I want to show you these 2 points. Because we're doing bullish divergence, I'll also do it in a green box. So we're looking at this low level here and this low level here. What bullish divergence is when price makes a lower low, but the RSI makes a higher low. So an easy way for you to do that is to notice where there's a low, which is this low, and the next low, which is this low, is lower than the previous low. So a low is lower than a previous low. And then you look at RSI and you can see that this low here is higher than the previous low. So I'll highlight the bullish divergence on the RSI also. So that's highlighted there. So this point here is the same level. No, sorry, this point here is the same as where the RSI level is here, and this point here is the same as the RSI level here. I'll also put a vertical line, sorry, so that you can identify. So you can see that this low point here is in line with this low point here, and I'll do the same for this side. This low point here is the same with this low point here. And the easiest way for you guys to draw our bullish divergence is by using this method, by highlighting two sections and also putting the vertical line so you can see that the exact point on the RSI, but also using the trend line. So you click on the trend line and you'll draw a trend line from the low of this. You draw a trend line from the low of the previous low to the low of the next low. Then I'll double click on this line so you can see easier. I'll change my trend line to blue. Okay. So as you can see, this trend line slopes downwards. This trend line slopes downwards, but I'll make another trend line here. But this trend line slopes upwards. So again, I'm here to make understanding trading and using the technical tools very easy for you. So this is the easiest way that I can explain it. So you started off by first identifying two low points. What the first low and the next low must be lower than the previous low. Now we're identifying bullish divergence. So you identify one low, then the next low must be lower than the previous low. What I mean by that is the low for this low here is here, and the low for this low is here. So you can see you can clearly see that this low is lower than the previous low. Then at the same time, after that, you then put a vertical line so you can identify the low point of the RSI. So I'll put a vertical line at the lowest point here, and you can see that this is where the RSI is, and you put a vertical line at the lowest point here, and you can say this is where the RSI is. Then when drawing bullish divergence, first looking at price, which is up here, you draw a trend line from the first low to the second low. This slope should be sloping downwards, and then also on the RSI you draw a trend line from the first low to the next low, and this trend line should be sloping upwards. So again, the easiest way to identify bullish divergence is to draw it this way, as I've mentioned to you. And you need to make one of the key rules here is that the trend line on the RSI must be sloping upwards in a bullish divergence, but so the trend line must be sloping upwards on the RSI for bullish divergence, but on price the trend line must be sloping downwards to show bullish divergence. So just remember that price trend line slopes downwards and the RSI trend line slopes upwards. That's for bullish divergence. Now I'll look for bearish divergence. This is an example, but yes, this is a good example. You don't always have clear examples, but here is a very good example anyway. So now I'll identify the two high points. I'll be using red this time because it's bearish divergence, or pink. Those 2 points here and those 2 points here. And what I'll do again is get the vertical line, draw the line here at the top of the RSI, and draw a line here. So now you can see that, you can see that the two peaks on the RSI have been highlighted, and the two peaks of price have also been highlighted. So what I'll do now is I'll use the trend line again, but I'll slope. You always use the trend line and you connect it from the first high to the next high, and from the first high to the next high. So I'll do that now. You can see that this trend line is sloping upwards, and I'll do the same with the trend line on the RSI. this trend line is sloping downwards. So as you can see, with bearish divergence, you can see that price has made a higher high, but the RSI has made a lower high. And this is represented by, on the price, the slope is sloping upwards on the trend line. And the trend line on the RSI, the slope is sloping downwards on the trend line. So just to show you again, this is bullish divergence. Bullish divergence is when price makes a lower low, but RSI makes a higher low, which is represented by a sloping down trend line on price, or a sloping up trend line on RSI. And bearish divergence is when price makes a higher high, but RSI makes a lower high, which is shown here by the trend line sloping upwards on price, but the trend line sloping downwards on the RSI. So bearish divergence is a good signal for you to sell, and bullish divergence is a good signal for you to buy. I'll just zoom out a little so you can see both. There's the bearish divergence, there's the bullish divergence. If you follow this signal here, when you saw bearish divergence and sold, you could have made over 200 pips. And if you follow the signs here for bullish divergence, you could have made over 280 pips. So I'm Justyn, Trader 187. I hope that this video tutorial helps. If you'd like more information, like and subscribe to the video, and subscribe to our ebook and mail list so that you'll receive more videos. Or if you'd like more in-depth information on how to use the RSI and apply it for practical trading, then just contact us. Hope this helps.